So wavelength. The length of individual trend waves is the most important factor for assessing the strength of price movement. So what is the strength? We talked about last time. It's like the degree of the strength of a trend is like the degree of like this, right? For example, so this downward trend is probably stronger than this downward trend because it's more steep. All right, so during a upward trend, long rising trend waves are not interrupted by correction waves, which show that buyers have the majority. But on the other hand, smaller wave trends or slowing trend waves show that trend is not strong or losing its strength. For example, right here, it's not as strong as, for example, right here, right? It is a downward trend, but it's not very strong. There's a lot of corrections and rejections, as you can see, right? We're using the vocabulary that we've learned before. So as shown on this image, that the trending phases are clearly described by the long price waves into the underlying trend direction. So as you can see, this is an entire downward trend, but there are little fluctuations in between. But these little individual downward trends with little corrections, these are strong downward trend, small, strong downward trend incorporated into a more moderate downward trend. Did that make sense? So, okay, let me erase this. Clear all drawings. All right, so on the left, the long trend waves confirm the high trend. The long trend waves confirm the high trend strength. The trend becomes to a standstill as soon as the wavelength is shortened. So this is long, medium, short change. Do we see that? And on the right, the downward trend is characterized by long falling trend waves. However, the trend decreases downward and the trend reversed shortly after. So we got long, medium, shorter, shorter, and then we reverse. So you can kind of see a pattern here, right? So if we see this in the stock market, we can kind of infer that, oh my God, we're coming to a trend reversal. I want to make sure that we fully understand it. We don't have to make effort into memorizing it. Understanding is key. And also, as we know, with these, if you constantly, so we're constantly bringing up the terms, right? You're actually using it in real life if you communicate with people that know these. Of course, there's little people at your school that might have this kind of knowledge. But say if you talk to college students that study these, you're going to have a really engaging conversation and they know that you know what you're talking about when you use these terms. So it's just a win-win situation. Yeah. And in addition of providing financial and analytical education, we also want to tell you guys, stress like the importance of connections in the modern world. The most expensive thing right now is information, connection, and human relations. And as high school students, we might not realize it yet, but in the future, everything is about connections. You getting a job, internships, most of the time, a lot of time, getting into college, people rely on connections. So how to build connections is to have similar interests, to have a good conversation, to demonstrate maturity. And these are going to be things that can help you to enhance that. All right, so next slide. Angle/steepness. So we've talked about this a lot. The angle determines the strength. Now this is the exact degree that we're even pointing out. And now these are features that a lot of stock trading analysis apps have. So you don't have to physically go have a ruler and measure it. So, all right, the rate with which the price raises during a trend is also of very great significance. In general terms, moderate trends have a longer lifespan, and a sudden increase in the price usually indicates a less sustainable trend. So from what I just said, do we want a moderate but long trend, or do we want a sudden change in price? Which one would you prefer if you are invested? So just type 1 or 2. So 1, we want long. Yes, Thank you, Jennifer. Yes, we want long, stable trend because the sudden raises that really cause a like unsustained trend. And we can observe from this phenomenon during the so-called price bubbles. So new term, let me type. So price bubbles. This is where the price falls again just as quickly as it explodes, as explosive rises. So price bubbles is like it falls really fast and raises really fast, falls really fast, raises really fast, like this. So it's kind of like very big fluctuation, but also known as price bubbles. Okay, and the development of the steepness of the trend and price waves compared to the overall chart context is important. So we want to look at it in the context, similar as when we talked about candlesticks, right? We want to look at the ratio between the wick and the body. Remember that was a long time ago. And when we compare those, we get the relative context. Same with understanding people, right? You can't just judge someone by their SAT score. You have to learn of their context. Maybe this person who scored a perfect SAT score have the most expensive tutor, and this person who scored a let's say 1350 learned all by themselves. So who's actually smarter? You have to consider the context. That's why college admissions consider the well-rounded, the overall aspect. All right, back to topic. So why is the considering context important in this scenario? Accelerating or weakening price waves might show a trend. It's picking up speed or slowing, coming to a standstill. So if it's accelerating, it might show that the trend is becoming more stronger. If it's weakening, that might show a slowing down or a trend reversal. So interesting correlations can be made together with the concepts of length. A trend is intact if we find long trend waves or trend waves that become longer with a moderate or increasing angle. On the other hand, if a trend with trend waves that become increasingly shorter and which is spontaneously losing its steepness, that indicate a possible end. So as you can see here, this one is 48 degrees, right? 48 degrees. This in the context is more steeper than 24 degrees. And as the trend is slowing down, it indicates a trend reversal. So in this image, the angle of the trend waves described in the length of the trend. Decreasing angles and longer correction waves at the peak indicates downward trend is coming. So, okay, so question. How do you know what length to draw the angle for? Okay, so yes, it does make sense. So how do I know, okay, how do I know that I stopped here and I start a new one instead of doing this, right? Is that right? Yes, okay. So as you can see, these lines is touching the points of most of the graph. These lines are what we call support line. A lot of people, we mentioned this a lot. So this is what we call a support line. When you think about the word support, it's supporting the graph, right? So it's touching it. It's like a stand that is hanging on to the graph. So look, it's touching the graph, it's touching the graph, it's touching the graph. Okay, now we cannot continue this anymore because we can't continue. Okay, hold on, let me look at the chat. So you know there is going to be a trend reversal when a long trend slows down and get weaker trend. Yes, 100% correct. So let me re-explain. And right here, you know how this touches the point here? It's very close here, very close here. So if I were to draw this, I probably will do this instead. It's a more accurate support line. So as what Jennifer says, yes, we're slowing down. This most of the time will indicate a trend reversal as it settled down. And another feature that checks that indicate a reversal is that this is relatively like within its range, right? There's not that much fluctuations. But right here, you can see that it's very big fluctuations. If we were to draw a candlestick, it would be like this. It would be an evening star that open and close at the similar price point. Now, this usually indicates a price reversal. And another thing we can incorporate is what did we talk about last time? I think it was like what confirms a trend reversal. It's the trend reversal. We label it the high, the price points, the high, new high, lower low, higher high, remember? So we incorporate price points, right? So this clearly demonstrates a trend reversal and confirms it. All right, okay, so now let's move on to the next component, impulse versus correction. Impulse versus correction. So this is the same chart. So now let's talk about ratios. If we add the ratio between the trend waves that move in the prevailing direction, the so-called impulse waves, and the correction waves at the third element to the length and angle, we can understand almost every chart. So what are impulse waves? I just said impulse wave is if we add the ratio between the trend waves that move in the prevailing direction. It's kind of like we add, well, I'll explain it more. So a trend with long trend waves and the only short correction waves shows a greater imbalance between the buyers and sellers. Okay, so a trend with long trend waves, so long trend waves with short correction, this is a short correction, it shows an imbalance between the buyers and sellers. But if it shows a larger price wave fluctuation, it shows a more imbalanced, so more unstable, which this led to a downward trend, okay? And an upward trend with small correction waves signals that buying interest is strongly outweigh the selling interest. So this part, I want this selling interest is less than buying interest. So we incorporate the stock market as a war between the buyers and sellers, right? And then this section, this is say buying interest is strong. But for this part, we can say that the selling interest is relatively equal to the buying interest, even though the trend is still going up, but it's relatively equal because of the fluctuations. That's what I was trying to get through. Okay, so what does this mean? So if a trend with longer correction waves with a run deeper against the prevailing trend, which is right here, deep downward trend corrections during the upward suggest that the sellers are active in the market and can move the price sharply in the meantime. So right here, the sellers are becoming active and it is initiating their win on the battlefield. So this suggests that the strength ratio between the buyers and sellers is more balanced right here. And a trend like this is easier to turn if the sellers become just a little stronger. So right here is really easy to turn. It can go here or here, but it will be easier to go down if the sellers are just a little bit stronger. And thus it is always stands on the brink. So this image demonstrates how the downward trend was foreshadowed by the increased size of correction waves. I'm not sure if you guys learned this in English class. Foreshadowing, did you guys know this? Foreshadowing. So this is a literary device that basically states this part of the book indicates what will happen in the future. So this part of the graph kind of foreshadows the downward trend. That is how we use this term. This is a relatively strong upward trend because first, okay, so let me type everything. So degree is 48, okay? This is a relatively, why do I say relatively? Because it's in the context, right? Relatively stronger, more stable upward trend. So this is what you will be writing when you're analyzing charts, right? Taking notes. And then why? Because why is it strong? Why is it more stable? First, because it is relatively steep compared to the rest of the chart, right? And second, it has little price fluctuations. And in addition, the sell buying interest is way stronger than the selling interest. So these are the notes for the 48. Okay, so now let's look at the 24. The 24. So for the 24 degree, so we could say that it is a maybe sideways wave. It's kind of a wave. Is we learned about before, it's going like straight, right? So why is it a relatively, or we can say that it is a weak upward trend. So what shows that it's this? Because it's relatively less steep compared to the context, which is 48, right? And then there's is big fluctuations, the selling and buying interestively the same. And if we were to look at this whole thing, the opening price and closing price is similar. All right. So that's kind of summarizes the plot. What's selling? So you can buy stocks and sell stocks, right? When you buy stocks, you help increase the value of the stock because you're contributing money. And selling is when you are selling the stock and that causes a decrease. So the more people are buying, the higher value the stock, which means it'll go up and up and up and up. But if more people are selling, it will lower the price, so it will go down and down and down. So it's buying and selling stocks. The swing structure refers to the formation of high and lows, right? The higher high, lower low, highs and lows. And the interpretation is very similar with price waves. So these are price points. So these are price points. And for example, an intact upward trend usually manages effortlessly to set new highs. So we can see that new highs are being set effortlessly. Here, here, here. Yes. And if the price has problems breaking through the previous high, like forming higher highs, or it does not manage to exceed the last ones, this may signal or indicate the trend will come to a standstill, a sideways phase, or a trend reversal. Traders should particularly be watchful if the price immediately reverse after a breaking through of a high and cannot continue to move in trend direction. Such trend weakness is also a sign of like exhaustion. Okay, so this is what we call an exhaustion. It's getting tired, okay? The sellers are pushing and pushing and pushing and pushing, but they're getting tired. So now these sellers are introduced. So that's what we call it, exhaustion. Let me spell it out. That is not how to spell it. Exhaustion? Like that? Yes. Okay. So a complete break of a swing structure is often a clear sign indicating that this trend is over. So this is what we call a break of the swing structure. So this is a very clear sign that the trend is over. Okay. If we see this, we can basically start selling and making money when selling. So if the price does not break through the previous highs, and if the price falls even below the previous low, the trend is over, okay? So this, as you can see, the low is increasing. But right here, the low didn't even exceed the previous low. And here the highs are increasing, but the high didn't even exceed the previous high. So this double confirms a trend reversal, okay? And in this figure, the price first made a lower low right here, made a lower low during the upward trend. This is already very strong bearish signal. This can already signal a lot of things, right? And shortly after, the price also failed to make a higher high right here. It failed to exceed the previous high. So this completes the trend reversal and indicates the next. So what we went over this slide is very important. This is how we answer the question when people ask me, how do we know the stock market is about to go up? How do we know it's about to go down? So this works the same as if it was going up and go up. go down and go up. All right, so this is some very useful knowledge. So as already mentioned, the trend and trend waves can effectively analyze using highs and lows, which are these wave points. And the points marked by these X indicate the reversal of highs and lows, first forming a lower low and then second forming a lower